Right, how's it, people? Winston Kutsia, aka Mr. Mayor Forex Trading. How to trade like the big guys, the institutional traders. Now, the institutional traders, they aren't all on the same WhatsApp group and they tell each other, okay, we're going to buy this asset now or we're going to sell this asset now. No. If you had that idea in your mind, no, that's not the way they work. They all trade at certain levels. They wait for price action to get to certain levels which they have predetermined by themselves. Now, all institutional traders don't jump in at the same time. They don't do that. If let's say 10 institutional traders jump into one trade at the same time, it will be utter chaos in any ways for that asset. No, they all jump in on random times, but you need to piggyback off where they are, because you need to trade with the institutional traders, not trade with the retail traders. You need to trade where the big boys are. Now, how does that happen? How can you identify where they trade? Let's look at this asset. This is the Aussie USD. You first go to the daily. On the daily is where you can see where the institutional traders are, where the big boys are. Now, how do you identify that? Look at this. You look for abnormally long candles. These big candles over here tells you that, all right, a big boy jumped in there. Now, if a big boy jumped in there, let's take this and move it there. Now you know, all right, a big institutional trader jumped in there, and that is why there's an abnormally long candle over there. So you can see where they are. So now they have told you. Now you know where there's going to be resistance. Because remember, these guys put big money in there, and they don't want price to go past where they put their orders in. So you know that there is a level of resistance over there. So now how do you can go by the previous candle's body. You can work on that as well and make the thickness how you think you want. Now you know that there is a level of resistance. So price came down. These blue blocks that I have here is the weekly supply and demand zone. So if you go onto your weekly time frame, you mark off with blocks where price turns at a 90-degree angle, where price turns. Let me just show you guys quickly. Let's go into the weekly quickly. Let's go there. So that's what these blue blocks are that I mark off, where price turns, where there's buyers on a weekly basis. This one is a bit of the wrong angle, wrong place over there. Let's go up there. There we go. I didn't even notice that. So on a weekly time frame, I go and I mark off where price makes a 90-degree turn. Like there, price turns, broke through there. There, price is testing it. This is on a weekly basis. So I know that there is a level. So I mark off these levels where price turns. That's how I get these blue blocks. But I'm not working on that now. That's where you know where to put your take profits, is on those big blocks. So let's get back to this one quickly. So now I've identified that a big institutional trader jumped in there. Some big boy jumped in there. That's why that's an abnormally. So I will wait. I'll see price comes back into this level of supply and demand, this weekly turn. So I see long candles. There's a nice long wick there. Long wicks is my entry point. That's where I jump into a trade. If I see a long wick, I jump in. So there I know that there are buyers over there because I already marked it off. So once I start seeing these long wicks, I jump into this trade. I put my buy over there. My stop loss will be just below this wick over there, and then I let it ride, and I put my take profit right over there at the next level of supply and demand. So you can see that the trade went from here right up to there. But now I do know that there is a supply, well, actually a resistance over there, because I know that, sellers, a institutional trader jumped in there. So instead of putting my take profit right up there, I will put my take profit right below this level, because I don't know if it's going to push down from there or not, because I know a big guy jumped in there and he doesn't want price to go past his level where he jumped in, because then he's losing money. So there I will jump into my trade after that long wick. I see nice long wick, and as soon as the next candle opens, you put your buy order in, and your stop loss below there, take profit just below this guy's level, and you leave your trade. Remember, this is a daily, so this is going to take a week and a half, but eventually it will hit your take profit. That's what it did with mine. It smacked my take profit right over there. So now I do see long wicks over there, nice long wick. So what I would do after this nice long wick, what do you normally do? As soon as it jumps there, I would put a sell order in, because I know that there's a big guy there. So I put a sell order in there. That's what I did. I put my sell order in, and my take profit was actually way down here, close to this level of well, supply and demand. It didn't make it there all the way, and unfortunately, when it went up there, I got knocked out for that stop loss, because my stop loss was just above this level. I didn't put it there where the wick is. I put it just above that level of resistance, because that's where that guy is. So yeah, unfortunately, I lost that one, but I already made money there. So now I saw, all right, it broke through. What I'm waiting for, when I see a breakthrough of this level, I know that's level of resistance. Now it's going to turn level of support. I wait for a candle to open and close above that level of resistance without touching it. So like this candle there, it broke through. The next candle opened above that level, and it closed above that level. That to me is a breakthrough. Sometimes you get these little pop to the upside, and that is of course a liquidity grab. So I'll wait for a candle to open and close above that level of resistance without touching it, like this candle over there. It opened and closed above it. So now I'm going to wait for price to get back into this level, because now I know that that level of resistance now turns to level of support. Now this guy is going to be buying over there, because he got knocked out, so now he will be buying. So once price gets back into this level, I put my buy order in. You can wait for a wick to form if you want to. Once you see, right, there's a nice wick over there formed, it jumped to the next candle, you put your buy order in, your stop loss below that wick there, and look at that. Where will your next take profit be? At this level of supply and demand, the weekly. So you put your take profit right over there, and look what price did. It took a couple days, week and a half, but zap, it came up to there and it smacked your take profit. So now I'm looking for where are the sellers, where are the buyers. So price didn't break through this level. It did not break through it, so I'm waiting to see. I know that the sellers are there, but I'm waiting for an institutional trader to jump in. I'm waiting for a big guy to jump in, and I'll see, all right, and then bam, look at that, a long candle, a very long abnormal candle. So now I know, all right, let's move this one up there, let's take this one. Now I know that there is a seller over there. The institutional traders jumped in there. Look at that long abnormal candle. So now I know that that is my new level of resistance over there. So I will wait for price to get into this zone or close to this zone, then I will jump in for a selling opportunity. So once I see, all right, price is coming back, or it's coming back for a retest on that zone. Not necessarily to say it's going to make it right in there, but if it does, good. But I'm waiting for wicks. I'm waiting for a long wick. So from here I will go over from the daily to the 4-hour time frame. Let's go to the 4 hours. This is usually where I jump in for my trades. Alright, so let's look at this quickly. Okay, there's that long abnormal wick over there. The sellers are in there. So now I'm waiting for price to get back into this zone, or I'm looking for wicks. I'm looking for long wicks. So I see price get there. No, that's a short wick. No, that's a engulfing candle. But no, I'm looking for wicks. I trade with wicks, not with just engulfing candles. I want to see wicks. So I see price there. Okay, there's my entry over there. Look at that. That is what I'm looking for. Nice long wick. There's my long wick. After that wick closes, after this candle, because it went from there, went up and made a nice long wick, closed. As soon as the next candle opens, I put my sell order in, put my stop loss above this wick over here, or just for safety reasons, you can put your stop loss, above that level of resistance, because it might still go up into this level, but you know that there are sellers there. So I would put my stop loss up there, and look at this nice run. And where do you put your stop loss? Your take profit. You are going to put your take profit. Let me just get to the daily quickly again, time frames. Daily, you would put your stop loss or your take profit right there at that next. You would put your stop loss right there at that next level of resistance over there. Now you have marked off where the buyers are. Remember, most your previous one, you've marked off where the buyers have climbed in, so you would put your take profit right over there. And it's as simple as that. Now I'm at this level again where I know that there are buyers because I've seen these candles. I know that the buyers are there because they actually broke through this previous level of resistance. Let me just show you there quickly. That was where the previous level of resistance was, where there was an institutional buyers from here pushed price through this level of resistance, through that guy. So you know that the buyers are more than the sellers. They are bigger than the sellers. And here the sellers took over again and pushed price back down. So now I've got a level of confidence that from here where I see these wicks, where I see these long wicks, I know that there are buyers over here. So I have jumped back into this trade again, into this one. I have done another buy order in there again. My stop loss just below this wick over here, and my take profit is here. My TP is right over there. Why is my TP over there? Because I know that there are sellers. This is where the sellers jumped in. They didn't jump in there, they jumped in here. Let me just move that back up there again. You see there where this abnormally long candle is, this is where an institutional trader jumped in. So I know that there is where the next level of interest is. That's where my resistance is. That's where the big boys are. So here also I see Bob, the sellers jumped in that. So that's why my stop loss will be just below the previous level of sell off, which is right over there, that level right over there where that long wick is. That's where I put my take profit. And I'm not, trading is not 100% sure. It can still just, pop down further from here, and the sellers can actually take over this and push it past this where the buyers are, where the institutional buyers are. So, but that's the way I trade. Small stops. Look at that stop loss that I have, $2.24. That's my stop. If I lose $2.24, it's nothing compared to what I can make, $27. This is the way I trade. And if you do need more guidance or information on this, please feel free. Join the Facebook page. It's called Forex Hangout. Send me a message on there. I do give private lessons as well for free, absolutely free. My channel is free. The Facebook is free. I give my guidance for free as well. If you need anything, send me a message on Facebook. Subscribe to the YouTube channel. Join the Facebook group. The Facebook group is called Forex Hangout. Join there. Let's build a community of traders, because the more traders they are, the better we're going to trade together. Because I might see something that you don't, or Joe might see something that me and you don't. So join it. If we can build our group, and it will be free. Everything I do is free, because trading is for everyone. The knowledge I got from trading, yes, it took years to get the knowledge, but it's to share. This is what I'm all about. It needs to be shared. But from my side, please have a great one. Join those channels. If you need more, send me a message, either on YouTube, subscribe, or on Facebook. Send me a message, and I will help you where I can. Have a good one.